right, hello guys. Hope everyone is doing well. I'm in a gold trade right now, as the title suggests. I have actually two positions, and I do believe we can possibly see a little bit more upside. Okay, so I will talk a little bit more on the fundamentals. I will then focus on the risk side, and of what could possibly turn this trade downwards, right? And then I'll get into the technicals. Okay, so it's gonna be a little bit dry. Okay, I'm sure a lot of you guys are trying to, not everybody is here to really understand these things. But these are drivers of the market, right? And what we do here is we put a lot of weight into having proper information that can be actionable, right? We look at the macro, we look at positioning. I guess we do look at institutional reports as well, right? Those are not really what drive our trades fully, but we do read a lot of institutional reports, be it from tier one banks like JP Morgan, things like that, or MUFG, Credit Agricole, things like that, right? So we try to paint a really important, I guess not important, but a thematic view of everything. What institutions are looking at, what is their positioning, what is the chart doing, and what are the fundamentals doing, right? So we start with the fundamentals always. So it's gonna be dry. So those who don't want to listen to that, then just skip over to the technicals, I guess. But this is important stuff, right? Some I'm not gonna really fully understand these things. But it takes time to learn and have that experience, and nothing beats the experience, right? You can learn all these things, but you also need to know how it actually plays out, and the only way to really do that is just to see it, right? To have more screen time. Okay, so but in any case, let's start with the fundamentals. Okay, so coming back to the macro, right? Okay, so what is going on with the macro, right? So if we take a look here for gold, right, we can see that the economic growth side has been really bullish. And what really that means is it's against the dollar fundamental. So everything here is based on the dollar. And what it's saying is that when there's some weakness in the dollar, that's actually really bullish for gold. And why that is because of, well, you can say that because a lot of commodities are obviously denominated in US dollars, right? So that's, yeah, partly one. But it's also the idea of the risk on and risk off kind of dynamics. It's not very clear cut because obviously gold is a safe haven, and in different types of regimes, gold can rise. But in this case, you guys know pretty much this a very big portion of the few months this year, we actually see gold downtrend. And why did that happen? Well, monetary policy, right? So monetary policy is actually a very key thing to focus on, and it's actually a really interesting information to a very powerful information to actually have a good idea of what gold will probably do in terms of the direction. Okay, so when monetary policy is in place, right, inflation is high, the expectations for possible hikes are in place. Those things are going to actually pressure gold, and that's what we got because for the most part, markets were actually having a little bit more of a hawkish repricing, right? There's some that expected about a 37 basis point like hike for this year. Now we have seen that drop a little bit because the data in the US is starting to weaken, right? Which will then reduce bets on hikes. And yeah, okay. We also had FOMC come out for July. And I think for the most part, there are several participants. They didn't really specify the members or whether they're members of the, in within the FOMC, or within the Fed, or are they like non-members, I guess you can say, because they just said several participants. But there are more that are a little bit more hawkish, basically, right? That saying that, look, I think there should be, I don't know if you can call it insurance hike, but I guess, yeah, in a sense, and it is because they're saying if they hike now, then that can possibly reduce the need for hiking later, right? And some of the things that they brought up, which I found really interesting, is, yeah, I mean, investments are still relatively strong there. Growth is, I mean, it is easing, but it's still, positive, right? We are seeing consumer spending, decent. We have some expansionary growth as well for the PMI side. And so those are things that they're kind of watching, and inflation is still sort of, elevated, right? We did have some disinflation, but then we started to stall for July. So August inflation reading is really going to be important, including jobs and things like that, right? So, fair point. They also did say that jobs in their eyes overall is still pretty stable, right? But obviously, as of recent, we're starting to see a little bit more easing on the job side. We also did see some easing in the retail sales side. I think we were negative, if I'm not wrong. Let me check here. Yeah, we were actually at minus 0.06%, which was a pretty decent surprise there. Consumer confidence is also starting to reduce, which basically just means that consumers are starting to feel the brunt of the cost of living, interest rates, and now they're kind of like, look, they probably will want to increase more savings, right? Because the US, a lot of people don't really have a lot of good saving ratios. So they're probably going to start tightening a little bit, right? Because things are starting to get a little bit more expensive. Maybe don't go out and eat those types of expensive foods. Maybe don't eat fast food. Maybe try to buy more groceries. Try to cook more at home, and maybe don't drive the car as much. Maybe take the bus. Yeah, I mean, things like that, right? So, um, and yeah, I mean, so for the most part, a lot of what's driving gold right now to the upside is not just because we're bottoming out, because what does that actually why is it bottoming out? That's the question. Why is it bottoming out? And it's because of the data, right? We're starting to see that economic growth is very, very bullish for gold, right? We're starting to see some weakness in the US dollar, which is bullish for gold, right? Which then reduces the bets for rate hikes. That's why we saw markets are starting to actually have a downward repricing towards, I believe currently it was 16 basis, 16 basis points, but I think 2 days ago it was at 12 basis points. So there's a little bit of that increase there, but I mean, we've been cut by half, right? I mean, it's a pretty decent signal there from a market's perspective, right? We see inflation as well. At least for PPI started to reduce a little bit, started to ease. I mean, we started to see CPI kind of peak at 3.4%. We had some disinflation in June because of lower oil prices. And the PCE side, which is the personal consumption expenditures, are sort of stalling at that 3.3% as well. No upward surprise, but also no downward surprise. Okay, so 2-year yield has been pulling back, to be honest with you. I mean, it is, I mean, when you think about it from a 1 year, 2 year standpoint, 1.5 to 2 year standpoint, it has been rising quite rapidly. But if we take a look at most recently in the past 2 months, we are having pullbacks into the front end yields, which are the 2 year yields. Okay, so that's obviously a little bit more bearish for the dollar, more bullish for gold usually. And if that continues, yields start to rise. That means bond prices go up. That's actually going to be really, really good for gold. Okay. And also the job side, we saw that non-farm payrolls took a huge miss. Okay, a huge miss. Okay, we're talking about minus 23K. They were forecasting 85,000. I think before we had even downward revisions of actual jobs data coming out actually lower than what they actually initially put out. Okay, so that's also really bearish for the dollar, which is bullish for gold. Unemployment rate more or less stable, so nothing there. Weekly jobless claims, more or less not terrible, I guess you can say. The private sector has weakened. Job openings has also weakened by a little bit, modestly, not too crazy, but yeah. So ultimately, we're still seeing a more bullish gold. And then I guess if you want to look at crowd sentiment, I don't focus too much onto that, but I do, it is nice to use it as a contrarian. But yeah, I mean, even the retail side are super bullish on gold. But that doesn't necessarily mean, oh, go short in gold, because we look at the actual fundamentals, right? And the fundamental is showing this really decent strength coming in for gold. That's why we're seeing a score that's pretty strong, right? We're seeing an 8 score, which is pretty bullish, okay? And we can also see it in gold, right? Look at what gold has been doing so far since like the beginning of August. It's just been pushing up ever since we started to get downward revisions in FP, jolts, things like that really, really push gold up, right? So is the market dynamics, right, guys? So now let's look at positioning. Okay, so non-commercial essentially is more longer term positioning from the institutional standpoint of like hedge funds, asset managers, investment banks. What we can see is that as of recently, we're seeing a little bit more buys coming in, right? We can see that institutions are actually stepping on the bid to buy more gold. Very, very little sellers here. We can also see it overall in the overall net positioning has been increasing over time. 9% change has been kind of, hit or miss, but ultimately we do see it here that, yeah, kind of modestly longer term positioning has been starting to kick back a little bit, right? So that's interesting. Now let's look at leveraged funds though, right? Because leveraged funds are also institutional positioning, but they're more on the shorter term side. And what we can see is that 93% as of recent is super long, right? um this is pretty crazy, okay? And we're starting to see as well a lot of the longs are coming in, right? We can see a lot more positioning net that are coming in. If we take a look at the positioning against the US dollar, we can also see how gold has been rising a lot more on the leverage fund side, on the shorter term positioning side, as compared to the dollar, right? In terms of how much of a gap, right, and spread we have in terms of the positioning side. So we can definitely see a little bit more upward revisions. We can see that the dollar is, relatively modest, but we can see pretty flat, right, as compared to gold. We can clearly see that uptrend right here. It's pretty obvious, okay? So I think that's important to take note. Another thing that I guess is useful to look at is seasonality. I'm not saying that this is a sure thing, but I think it can be useful in some cases. And what we can see is that usually in seasonality, based on seasonality for 5, 10, and 15-year average, historically, during this period, we're going to get some sort of upward move before we start to actually drop. And this is the same for equities as well. Usually during August till like October is when you're going to have a bit of a choppy, slow period, likely, possibly, I mean, a pullback as well before you get a little bit more upside, right? So obviously the 5 to 10 year is showing the upside, the 15 year isn't, because it's accounting for a lot more data. And usually gold, to be honest, besides the bull run that we've been having since like 2022, I want to say, till like 2025, then 2026 we started the downtrend. But before all of that, gold hasn't really done really much. Okay, for those periods where gold actually doesn't really move that much, and I can show you right now on the weekly. All right, if we go back to say 2020, pretty much for like 3 years, like gold has done nothing. Okay, we can even go back to 2011 till like 2020. That's crazy. The 9 years of essential like break even if you were to be a buyer right here. You've just not seen anything for like 9 years. Okay, so I mean, there are those periods as well. So the longer you go, you're probably gonna have a little bit more. I guess you can say, I don't want to say accurate, but you're gonna start to see a little bit more data sets that can come in to show you that, hey, the longer you go, there's actually going to be pullbacks over time and things like that, right? That so I don't hate gold, by the way. I'm a buyer of gold. I have investments in gold, but I wouldn't say that those are things that I really would park my money in forever. I would say, what I mean by forever is like 20, 30 years. I don't mind it, but I think there's so many other like better equities out there and sectors that have real growth, that have real momentum. Like even just putting your money in the QQQM is like long term is probably gonna do you a lot more better, in my opinion. But okay, anyways, so coming back. Seasonality forecast in the next 7 days is to the upside. So I'm not really focusing on any of these levels, but I do have some levels that I'll show you guys later. And we can go in with the bank positioning. So you can see that Crédit Agricole for Q4 is actually pricing it about 5,000, right? So they think by Q4 we're gonna probably see 5K. Okay, wait, sorry, you guys can see that. All right, now you guys can. Unit Credit is pricing about 4.7. I believe they're also pricing like a range, so they're giving it from like 4.1 or 4.2 to 4.7. So I think we're way past 4.1 now, obviously. Let me just double check that. Yep. And so yeah, I think those are interesting things to take note, right? Bank positioning are rather bullish on gold as well, for the year. And that's kind of my thesis as well, right? Because we've kind of gone through everything. So this is kind of like a real like quick snapshot of what we do. Obviously, our research takes a little bit more time throughout the day, but this is essentially kind of the quick snapshot that we look at. Okay, so we look at macro positioning, non-commercial and leverage funds. We do see seasonality here and there, and also obviously institutional reports and overall positioning from banks. Okay, so those are things that we also look at. Yeah, in any case, let's get to the technicals, right? So what was I looking at for the entry, and this for the scaling as well? and what are the targets, stop losses, and things like that. So you can pretty much see everything right here, right? Let me just try to like bring this towards the right so you guys can see the price. All right. Okay. So firstly, when I was looking at gold, I believe I was looking at gold right here during this period. So I did not take any longs here, even though that would have been phenomenal. But I didn't like the fact that we were still below that 200 ME, and I would really like to be a buy. This was my analysis. I would really like to be a buy if we can break that, and we can also take out prior highs, right? So if you take a look, this was a very key level, right? You can say as well it was a prior support that turned to resistance, has been tapped multiple times, and then we took that out, right? So a lot of the shorts that are still short pretty much stopped out of this trade, right? Which created that beautiful short squeeze. And I forgot to mention one other thing, which is the recent treasury buyback. I forgot to mention that, so I want to mention that real quick. So obviously, as you guys know, the US Treasury are looking to buy back a couple of $1 billion of essentially bonds. So that drove a lot of the longer term yields, like 10 medium term, I guess, to longer term, like so basically treasury notes and I guess your treasury bonds, right? So treasury notes are usually medium term, treasury bonds are like 20-30 years, and then you have your treasury bills, which are usually no more than 52 weeks. Okay, so they were focusing mainly on the 10 to 30 year, and that really drove long-term yields lower by quite a bit. I can't really remember the actual number, but it was quite a decent move, and that also dumped the US dollar, obviously. And that was actually kind of the reason why gold actually started to push really high. And this was the day. And on this day, I actually had other positions as well, like Euro USD longs and things like that. So that done phenomenally well. I'm already out of Euro USD because I think we're starting to get a little bit more overvalued. But yeah, that's another thing for another time. We want to focus on gold. So, but when I was looking at this, that the treasury buyback, that wasn't, that hadn't happened yet. Okay, so for me, I was just looking at the main things that we go through in our analysis, which are fundamentals, right? And yeah, so I really like this push to the upside. I was looking at the daily, so I had two ideas initially. Okay, so I want to go through this with you guys so you can kind of get an idea of how I think, and then if it can help you in your trading, that'll be, I mean, great. All the better. But the first thing was, okay, I was looking at gold around here, right? So that was the 12th of August. We already saw this huge push. So I actually had an idea of possibly even entering in on the daily if the 4 hour doesn't get respected, right? Because obviously if you take a look at the daily, even just from this price action, it has pushed quite a large amount, right? I mean, everyone can see that, I'm pretty sure. So I wouldn't be surprised, right, if we actually do come back to this area of resistance, right, which was the area that we draw out on the 4 hour as well, right? If we can pull back, this is a great area to buy as a really strong discount. I mean, this is really great. So I would love to be a buy there if that happened, right? Now we obviously didn't get that, but so that was my initial plan. But then I also had a more shorter term sort of trade, which is on the 4 hour, which is if this level gets invalidated, I will look to be a buyer around here, right? So I had two ideas in mind, two levels, two time frames I was looking at. Now, if we take a look at the 4 hour, right? So I do use Fibonacci retracement just to kind of get an idea of where price can possibly pull back into. I do also look at this daily level right here, which is a previous area of resistance, a pretty decent level here on the daily chart. If you take a look, right, we can see that this was prior resistance, support, 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 resistance, right? And so if we break that level, I would say that was actually a really bullish sign. And what we can see as well, the moving averages are starting to converge. When we started to push higher, we pull back into the fib retracement. We tapped into that 50 moving average. While we can see as well that all of the moving averages are showing bullish, right? So this is really great. Okay, so we had all those signs in our favor, right? And yeah, so I decided to enter the trade, and initially it was quite choppy. We did pull back even, but at this time I didn't go break even because I only go break even usually when my trade goes to like 1-on-1. Yeah, usually, or if I trail it, like in this case I'm trailing it. So yeah, I mean, that's usually how I do it. But in any case, I don't focus so much on how much RR I'm gonna make, because the market's gonna give you what the market's gonna give you, and entries and stop losses and that gap and that spread really changes depending on where you enter and where your stop loss is. So it's very, very hard to be super specific into like, I'm gonna make 10R in this trade. Like, that's crazy, right? Nobody can do that. Okay, I mean, nobody can predict that. I mean, not that it's not possible, all right? So so I hope that makes sense, right? So when I got in, we had this, then the US Treasury buyback news came in, so we had this huge push. I was definitely looking for a scale in. I wanted a scale in so bad, okay, right? That I was watching this really, really like just every day, right? I mean, so far in the past few hours, I mean, and that's also on top of the other multiple positions that I have currently, which are like Euro GPY, AD GPY. I'm also in CAD Swiss franc longs and things like that. But I was really putting a lot of effort in gold, right? Because I knew that we had so much volatility come in, and I really, really want to be, take a scale in on this trade. Right, so my initial plan was on the 4 hour, if we can push back into this area, I would love to be a buyer. And if you take a look, that's kind of what we got, right? Sort of, right? I mean, not really clean, it just barely tapped it before heading higher. But the moment I saw this push, I wanted to be a buyer from there. I kept my stops pretty wide here, just in case if we do get some sort of pullback into the 50 and then continue. I would love to be a buyer. I mean, for it to come back to like the 200 moving average, I think there had to be something really significant for that, because we're talking about, I mean, at this point, right, we're talking about like a, pretty much a over 8% move down, which is pretty crazy. So yeah, I mean, at this point, buyers are definitely in control. The demand is just like super strong here. So I'm not too worried. I don't think we'll get too big of drops. Like I said, something had to be really significant. But in any case, right now for my scale in, I'm still waiting for, or I've not trailed my stop yet. I've just left it where it is. But my initial position, which is this one, I've already trailed my stop, because yeah, we had this decent pullback and we're starting to push higher. I think this pivot is decent for a pullback. Now, of course, you can break that thing, and or break this pivot low, and then I get stopped out, and then it continues. I mean, it's possible as well. If that does happen, I'll still look to be a buyer, right? Because yeah, I mean, there's no reason for me, at least at this point, to not be a buyer of gold. Right? So I'm not too worried about that, because I trade the thesis, right? The thesis still holds for me. Now, when the thesis doesn't hold is when, like I said, we start to actually like break out the pivot areas. That's, I think, a sign that maybe it could be a pullback. But at this point, if we do actually come back to this level here, I don't know if I'll be too fond of to be a buyer as of now. Unless, like I said, the fundamentals are still aligning for me, then fine. But if not, if there was certain things that changed, Hockey, repricing started to come back, then I don't know if I would be super like confident at that point. Okay, so yeah, everything is still the fundamentals for me. And what are the levels that I'm looking at for potential exits? So as you can see, I have a ton of levels here. So mainly on the daily, I found that to be the most cleanest for this particular pair. And I mean, I'm basically just looking at a lot of levels that has touched previously, right? Multiple times. Those are key levels that I draw out. So yeah, these are the key levels that I'm looking at. Obviously, yeah, they're obviously levels here as well that I don't know if I'll hold it till there, but we'll see, because this is ultimately still a swing trade, not really an investment. So I'm not like, I don't know if I'll hold it till there, and it all depends if my trails get stopped or gets hit, right? But I would say that, okay, we have already took out this daily level. We're now trying to approach to this level, which, yeah, was probably resistance, support, I guess you can say resistance, support, resistance, support. This is a pretty decent level of our key level, I can say. So I would definitely watch for that. I'll probably start to take maybe partials on my initial position. My scaling, I'll just let it do what it wants. But another thing about scale-ins is because you are basically buying it as it's moving higher. So if it does want to pull back deeper, then yeah, your scale-ins can get stopped out. So that's why a rule I always have is your scalers should always be smaller than your initial position. So I usually do it like a half kind of rule for me. So if I'm risking 1% on my initial position, I only want to risk 0.5% for my scaling, right? So a lot of those things really just depends on what your max risk for the day is, how many trades are you looking to take, the exposure. All right, those are things you have to figure out yourself, because I have my own rules, but it might not work for everyone else. So yeah, I just wanted to make that clear. That's how I do it. So my scalings are usually half of my initial position, and it has to be below my max, I guess, positioning for that trade, or max risk. So that can be 2% for you. That could be 1.5%. That could be 1% for you. It's entirely up to you and your risk appetite. Okay, so yeah, and I don't think I'll be taking any more scalings from here. I think I'll just let these two positions do what it wants. But yeah, just take note if you do decide to scale in, right? Because you can see on the daily, what we really got was just a small little pullback for that day, which then got reclaimed real quick, and then now we're like just pushing up again. So this is basically just one whole move. Pretty much. Okay, so I will probably take some partials here for the initial position. Scalings, I'll leave it. But then once we start to get to here, okay, I might start to take a little bit more partials as well. And then, but ultimately everything is going to be trailed, right? So it all, so essentially if I put to draw it in a perfect like scenario, which is always not usually the case, but what I would want to look for is, as we are sort of pulling back, pulling higher, then I would like to trail my stop as I go, trail my stop as I go, trail my stop. I mean, this is like a super perfect scenario, which I hope does happen. But yeah, that's essentially what I would like to look for. Yeah, so trailing stops are really important if you're holding positions for longer. For gold, I'm a little bit more open to that idea. Okay, I think for FX, maybe not so. I used to hold them a lot more, but yeah, you open yourself up to a lot of volatility, and FX, can really change a lot, especially, if you're trading like Euro USD. Yeah, you're usually just trading either USD long, if USD is bull or bear, that's really just going to affect pretty much all of the major pairs, but the USD pairs. However, yeah, you still have to kind of look at the relative strength between both of these countries, plus the central bank rate and the expectations. Yeah, so I mean, it's a little bit different, right? Well, gold is, you just really got to focus on the dollar, right? So if dollar is weak, but gold is going to be strong, right? Um, so yeah, I mean, my thesis still holds. I still think that the Fed is likely going to hold rates for the rest of the year. That's what I think. Most banks also feel the same. Yeah, I just don't think we're at that level yet. I think what is the risk, which I forgot to mention, the risk is really, like I said, if we start to see some hawkish repricing in the Fed, and monetary policies starts to strengthen a little bit, right? There's some expectations for hikes happening sooner, or increase in those expectations of hikes suddenly from 16 basis points. Markets are expecting like 40 basis points. Yeah, those are things that are pretty hawkish. Anything from the FOMC, I mean, there's a lot of, the thing about the new Fed is there's not a lot of forward guidance to go from. So what you're going to have to really focus on is the yield market, especially the front end, like the 2-year yields. Look at what banks are talking about, right? See institutional positioning. Yeah, I mean, those are things that are going to be important to look at. I think oil is also really important, because right now, if we take a look at oil very quickly here, we are actually quite elevated. We had this really decent pullback in August, right? Obviously, June was the better one, but we had this push back up because war escalations are sort of back on the table, and we sort of pull back, and then now we're kind of still holding up, right? So it does look like oil is like prime for the upside, I guess, and we do have this trend line here that possibly we break out, and pull back and then continue. I mean, that could be a thing, but it all comes down to the escalations. If we have more escalations and things like that, which we have been getting some tension between Iran and the US, obviously, but if things start to really like deepen and get worse, I think that's gonna be a little bit of a problem for gold personally. Obviously, right now gold and oil are kind of moving in tandem, but before gold started to push higher, oil and the dollar were moving higher, and gold was actually moving lower, right? So obviously that's why it's not always very simple where, oh, dollar goes up, gold goes down, oil goes up, dollar goes up, gold goes down. But now you're getting like a completely different thing where oil and gold are actually kind of moving a little bit together, right? It's not really so much because oil and gold are correlated, but it's really because of the US dollar, right? So right now we're getting that bearish dollar because of the treasury buybacks, because of the weaker data. Market expectations are looking more bearish for the dollar, but the escalations are still there. So oil is still sort of, still pretty elevated, right? But that doesn't really affect the story for gold, right? And things like that can change immediately, right? So you have to be, you have to like keep tabs with things, right? And be aware of all these different things, right? So that's why screen time is super important, and especially when all these types of events are happening, how is it like affecting everything, right? Have everything there. You can see from yields to US equity sectors, ETFs, to your rates, to your to oil, to gold, to the dollar. These are things you want to have, like, you want to have a list of all these things to be able to see how it's been put, how our market's kind of shifting. Volatility as well, VIX, VVIX, to SKUDEX, to TailDEX. Those are things that, those are more options volatility, but those are important because it tells you, like, is volatility back in the picture? Are people trying to like pay more premium on insurance for crashes? I mean, these are things that are important to definitely take note as well. Okay, so anyways, very long video for only one asset that I'm talking about, but I hope you guys learned something. I mean, we try to go really like in depth as much as we can. We can go further, but yeah, I don't want to take too much of your time. But I appreciate you guys for watching, and yeah, do not chase my trade, by the way, guys. This is not financial advice. I just want to let you know trading is super risky, so just be aware of that. All right. Okay, guys, just take care. Have a good run.